Can you time the market? Well, I don't know about you, but for the most part, investors cannot. In fact, it's so hard to predict how is the market going to react to different events throughout the year. Recently, with the pandemic that we had with COVID-19, the markets have been so volatile, and the different markets and indexes have gone up and gone down drastically. So obviously, if you had the magic ball and the crystal ball to see how the markets are going to react and time the market, you would have been able to make a lot of money. But in reality, that's not an easy thing to do. I know a lot of day traders try to look into the movements of the stocks and different companies, take a look at the moving averages in 50 days moving averages, 200-day moving averages, and then try to use those technical data to assess how the stocks would perform. But in reality, it is so hard to time the market. So you're better off picking the right companies that have a strong moat, companies that have a strong competitive advantage versus their competitors. And even during the difficult times, they can survive those challenges, and they can come back at it much stronger than before. That being said, I want to share with you how you can get lucky in the stock market if you happen to invest in the right time. And this is a story that applied to me opening one of my accounts about 6 weeks ago, and within the span of 6 weeks I managed to have 40% return on my investment, which is just crazy. But I don't think that's just me being super smart necessarily about investing, but it's a mixture of being lucky, having picked the right time to contribute to my account, but at the same time picking the right security to invest in. So without any further ado, let's get into it and review how this story unfolds. As you can see here, I opened an account, registered retired savings plan. This is a registered account that here we have in Canada. I opened this account back in March of 2020, roughly about 6 weeks ago. And initially I deposited $500, and then later on in March I deposited another $10. So in total I had deposited $510. And currently, if you go back and take a look at where this account sits at the moment, this is as of today, the balance for this account is $683.06, which shows an increase of $173.06, roughly about 40% return just in a span of about 6 weeks. So I want to actually dive into this account and show you what type of securities and stocks I purchased and whether I sold any of them. So let's take a look and get into it. These are overall the different securities that I have within this portfolio. I have 1 shares of ABBV or AbbVie, which is a pharmaceutical company. I purchased this stock for the price of $75.40 USD, and currently it's sitting at $80.36, which shows a return of 6.58%. AbbVie is one of my favorite companies in the pharmaceutical field, and they have a reasonable price to earning ratio of 15.90 at the time, and they also have a very decent dividend yield of 5.36% at this time. Their all-time high price has gone up at one point to $97.86 within the past 52 weeks, which shows a good potential for growth for this company. So, and of course, having a company in the pharmaceutical field during these times when we're dealing with a healthcare crisis is always a good investment in my eye. Next on this portfolio, I have 3 shares of Artis Real Estate Investment Trust. This is a Canadian company currently trading at $8.40 Canadian. And despite the fact that the price today went down by almost 3%, it still shows a total return of 28.24%, which is just amazing. What I like about this company is really their dividend yield, and the prices haven't really fluctuated as much over the years. This company actually, as I indicated, is invest in office, retail, and industrial properties. So it pays a monthly dividend because it's a real estate investment trust fund, and it is being traded at the Toronto Stock Exchange. Next on my portfolio, I've purchased 1 share of Foot Locker, which is a clothing and apparel company. This stock shows a return of 26.44% in such a short span of time. Currently, it has a price to earning ratio of 4.90, which is very low. and has a yield of 8.58%. My purchase price for this stock, as you could see, was at exactly $18. And I think I really got lucky, because if you look at the price that I purchased it versus the 52-week low price for Foot Locker, there's only a slight difference. Next, I have PDI, which again, it's a kind of a company income fund that pays frequently their dividend, and their dividend yield currently sits at 11.92%. If I'm not mistaken, they actually pay a monthly dividend. Next on my list, I have SPYG, or S&P 500 Growth Exchange Traded Funds. I purchased one share of this ETF at the price of $30.66 USD, and currently it's sitting at $38.15, and that shows a return of 24.43%. And lastly, I have the shares of UDAO, or ProShares Ultra Pro. This allows me to take advantage of the ups and downs of the Dow Jones index. This is for the top 30 companies in the Dow Jones index, actually. And despite the fact that today was a hideous day, showing a decline of 7.93%, despite that fact, I still have a return of 48.37%, which is just impressive. I guess, again, I got lucky with this one. I purchased the shares at a low average price of $31.46 US, knowing that the 52-week low price for UDAO was only at $25.32 USD. So really got very lucky with this. And in terms of whether I have sold any of my shares in this portfolio, the only stock or security that I have sold shares of is actually UDAO. I initially had 6 shares of them, but over the span of actually this week, when I thought that the stock had quite a bit of a run, I actually sold 4 of those shares. Selling price was close to $50, so I sold them around $50 USD, and you can see it's already down from the price that I already sold it at. So I made some money off of it, and I really wanted to make sure that I have some cash in this account saved on the side, so that when the prices of different securities and stocks go further down, then I can take advantage of that and take advantage of actually the dollar cost averaging and purchase more shares of quality stocks, ETFs, and different securities at the price that I find more attractive. UDAO is definitely on my list. The price point that I would be more interested to get in and purchase would probably be closer to $35 or anything perhaps underneath that. So if it gets closer to the $31 point that I purchased it before, or even further down, let's say closer to 25, where it was at one point, its 52-week low, I would probably buy more heavily into it. Keep in mind that the 52-week high price for UDAO is $137. Can you imagine if you are persistent and you are also optimistic that within the span of several, perhaps a year, or if you're lucky, maybe even sooner, the Dow Jones is going to recover and go back to its all-time highs? Your potential for growth for this stock is just impressive. So definitely something that I'm counting on. But in the meantime, I was trying to some extent, time the market and take advantage of some of those opportunities to cash out some funds, save it on the side when I anticipate that the stock market is going to decline potentially in the next couple of weeks. But as I said in the beginning of this video, I don't think myself or anyone can time the market. In fact, nor can the genius of investing, Warren Buffett. So I think you're better off in the long term picking the right companies at the right price, at a price where you're getting them at a discount, and then holding on to them for the longest, particularly if they are paying you a dividend. I think that's just a no-brainer. You're gaining from both perspective of increase in the value of the stock, but also through the continuous income that you're earning through the dividend income. You might have noticed that the total value of the investing in this portfolio was only around $500. So obviously this is one of my smallest positions. I do have investment in other portfolios. The main focus of my investments is through passive investing, and for that I use Wealthsimple Invest. That's the tool that allows me to use the robo-advisor services of Wealthsimple to invest in the stock market. In fact, through a basket of different ETF, exchange traded funds. As I fund my account, no matter how big or small, even that sometimes I just put in $5, automatically those funds goes towards purchasing a fraction of different quality stocks and exchange traded funds. And that way, I have more skin in the game. I tend to earn more dividend income because pretty much all of their exchange traded funds that I'm invested into, Wealthsimple Invest, pay a dividend. In fact, all of them do at different rates, as low as 1.5% to closer to even 4% dividend. And that's my main way of investing in the stock market. But then on the side, I do dabble through active investing through accounts that I just showed you. I also have account through Trade with larger sum of funds. There you guys, folks. My take, whether you can time the market or not, and how sometimes you can get lucky with your investing. I hope you enjoyed this video. If you did, please hit the like button and subscribe to Moementum channel. Here on Moementum, we post weekly videos about finances, investing, and personal development. I hope to see you next time.